All eyes are now on the U.S. Federal Reserve Chairman, Janet Yellen. She is expected to hold a press briefing later today, 2 p.m. Eastern Time. There will be 7 p.m. in London, 8 p.m. in Nigeria, on the decision of the Federal Open Market Committee. And the World Trade Organization meeting opens in Nairobi, Kenya, with a strong push for members to do more for the least developed countries. Plus, the climate change summit has ended in Paris, but the $16.4 trillion agreement is still the issue being discussed. What's the deal for Africa? We'll have a conversation on that later on the program. So let's get started. First, the world's #1 economy, and all the eyes in the world are on the United States Federal Reserve Chairman Janet Yellen ahead of an expected announcement on interest rate policy today. The U.S. Labor Department had reported a 0.2% gain in the U.S. Core Consumer Price Index, which will give the Reserve Bank more confidence to raise interest rates. 5 key decisions are on tap today. There is optimism, however, that tightening labor market conditions characterized by a jobless rate now in a range that some Fed officials view as consistent with full employment and strong domestic demand will put forward pressure on wages and drive inflation toward its target. Inflation is also seen heading higher in 2016 as the effects of last year's sharp decline in oil prices begin to fade out. The dollar's pace of appreciation is also expected to slow down, which could ease some of the pressure on commodity prices. That's the biggest news to watch today. Keep an eye on that. However, in Europe, the Eurozone economic data came in today. Germany and France are at the top of the discussion, as well as those data. The markets there in Europe are also still in session, but all will be close to quiet later this evening when the U.S. Fed Chairman Janet Yellen will make those announcements. But let's cross over to the Frankfurt Stock Exchange, where DWTV financial correspondent for Channels Television, Conrad Bossen, is standing by for us to discuss. First, start from Europe, where the December economic data came in mixed today. Germany and France are reporting a bit of a bittersweet numbers. Conrad, talk to us about these data ahead of the meeting tomorrow, Thursday, there in Europe as well, about the exit of the UK from the European Union.
Well, Bosun, let me start with the economic data we got today from the Eurozone. It's true, the Purchasing Managers Index of the Market Institute, which combines the performance of the manufacturing sectors and of the services sector, it fell slightly from 55.2 points in November to 54.9. But what's really important to know here is that as long as this index remains above 50, it indicates growth. So people on the markets are not very concerned about that slight decline. Adding to this, we got consumer price data today. Consumer price inflation for the Eurozone for the month of November was revised upwards to 0.2% year on year. That's not a lot, of course, but still it is positive given that prices for energy declined year on year by more than 7%, and all this put together indicates that the economy here in the Eurozone remains on the path of growth, if not a very slight one. Markets here on the stock market, as you can see right behind me, are also nicely on the upside. That brings me now to expectations about tomorrow's meeting of the European Council, where it's going to be crucial to see how the heads of state manage to find solutions for their problems together. And that's the stress that people on the financial markets will put on this meeting. How much togetherness are we going to see? The potential of a Brexit, of a leaving of the United Kingdom of the European Union after the referendum takes place, is something that makes people on the markets concerned. It is something that might be detrimental to the confidence of the economic recovery. Investors might be inclined to withhold potential investments just because they are not sure about the future of the European Union.
Yes, Conrad, quite a lot to chew from the European Union and the European Council tomorrow. But today, at about dinner time, both in Frankfurt and Lagos, the U.S. Chairman Janet Yellen will be holding a press briefing. The key question, is Europe ready for this liftoff?
Yes, Bosun, I think Europe is ready to digest a very small interest rate hike at dinner tonight. Everything's prepared, I would say, and everything speaks for a small interest rate hike in the United States. Remember, the main focus of the Federal Reserve in the US when it comes to interest rates is the situation on the labor market in the US, and not even during the times of the US President Ronald Reagan, which are considered by many Americans to have been a golden era. The unemployment rate in the US was as low as it is now, around about 5%. What's more, economic growth is expected to be around about 3% in the US this year. Gross domestic product, that is. That's robust growth, and also consumer price inflation is or has been increasing slightly during the last few months. In November by 0.5%. Everything is right now for an interest rate hike in the United States to happen.
Okay, so I'm sure you're looking at the emerging markets. Investors in Europe also consider emerging markets very critical to this decision today by the US Fed, including frontier markets. The emerging market stock index doing a little bit nicely ahead of that, those decision today by the Fed. So what are investors' expectation of perhaps 0.25% Fed fund rate hike today?
Well, there are concerns, of course, that we're going to see more capital sucked out of the emerging economies, repatriated, if you want, into the United States in anticipation of higher returns there. We've seen that during the last year, more or less, especially in weaker emerging economies. Some of those economies that had to cope with the steep, enormous decline of commodity prices. It's likely that more of this is going to happen. Also, of course, companies that hold dollar-denominated loans are facing higher costs, which could become a problem. Some people are saying that there is the likeliness of a credit crunch in some emerging economies. But also, there is another side to this. It's likely that the dollar is going to appreciate, to increase in value after interest rates hike in the US, which means a depreciation for other currencies, and that helps exporting companies in the economies, especially also Europe, but also emerging economies. And it's been a while that everyone on the market had the time to get prepared for this interest rate hike. It's, after all, a return to normal somehow. So whoever did not count with it is coming a bit too late, I would say.
Okay, Conrad, we got about six hours. Beg your pardon. We got about 6 hours to wait. So let's have some lunch, relax, get home, and sit in front of the television, waiting for Janet Yellen, the U.S. Fed chairman, to deliver her last press briefing on interest rate decision 2015 later today, 8 p.m. Time in Nigeria. That'll be 2 p.m. in the afternoon in Washington. Let's come back after the break. We'll talk more about the U.S. economy with Ed Jones, who is the CEO at World Economics out of London.